The smart money traders. So, and literally he said, like, I'm the alpha. I know when, why, and how the market moves. No one knows what I know. I trade alongside with the big institutions. Right? That's literally what he says. Like, obviously, that you heard that a lot. So, literally, the thing though with the smart money traders is, first of all, these traders are the closest to understanding what is actually going on. So they're definitely on a very good track, but still they're far behind. So they think they know it, but they don't. They know, they think they know the reason that they think they trade in line with the institutions, and yeah, that's the institutions trade, and no. So they thinking that is whatever is going on, like the smart money concepts. You maybe heard a lot, and I think a lot of you people also trading like these smart money concepts. But it's just another retail approach to enter these markets to give you like another reason, whatever. I mean, it can work pretty good. Don't get me wrong. It definitely forms a good foundation, definitely leads in a good direction. But if you stop here, that's horrible. You're in a good track if you introduce the smart money concepts already. Definitely the way to go, but only a step on the journey. So there's so much more to it. That's why we in Lit are not really smart money traders by any means. We're liquidity traders and cycle traders. Okay, and we even have something later on, which you guys will love, for at least the ones who are trading smart money concepts nowadays, because we have even something we call smart money traps. We dig even a little bit into that stuff, and obviously makes it easier for you to identify proper points of interest, we call it later. But first of all, just a brief introduction, like what is going to happen with the smart money trader. Most people already got it right. Choop. There we go. There's the shock again. Of course, it's the same thing with them. Again, same thing all over again, right? So smart money trader characteristics, they all look for inefficiencies in the market, like being like imbalances whatsoever, and also supply and demand areas, right? Again, they call it institutional candles or whatever, they maybe call it order blocks. There's so many different aspects to it. They're all on a good track, but of course, you should never really stop there, because that's not really what drives price. Of course, supply and demand areas will definitely be very important, but there will be supply and demand areas which you would 100% need to completely ignore and cut out. And obviously, we show you how to do it, and we have so many confluences of make life easier for you, because guess what? Supply and demand areas will play a role, but that will be the last point of our stuff when we then identify the right supply and demand areas and ignore the rest of them. So we definitely don't trade supply and demand in any way. We just use it as another confluence of the events at the last stage of our all confluences. Okay, so what they do else, they do use whatever, maybe Wyckoff, maybe psychology levels, whatever, the 80-20 zones and non whatever, right? They also do some other confluences of events, which is definitely not good, definitely not bad. But the most important thing is they're all getting induced by these false supply and demand areas. And again, if you have already experienced smart money concepts, like there are so many areas where there's inefficiencies or imbalances or whatsoever. And if you just pay closely attention to those areas, you get smoked left and right. You need to filter this out pretty good. And of course, it's very hard if you don't understand like what's really going on. That's why we show you so many confluences of events later on. For example, structures like a really good one, with liquidity zones being really good ones. And we have so many more where we show you how to easily filter these zones, how to even expect when they're being trapped and when they other should work. Okay, so just get this into your head that these zones are definitely are being attacked on purpose as well. So how does it look? Of course, first of all, the fishy says like there's a reason we are called smart money trainers, right? And yeah, smart for sure. So again, what do? They expect like an area of interest here. They said like the imbalance area, they take this zone now. And of course, they want the mitigation of this zone. And then of course, price will move in the direction. Same thing in here, right? So again, imbalance expected. They mock the imbalance. They're taking the demand zone in here, the demand candle. and then of course price will come back and mitigates this area, right? But again, works good in theory, but if you use it overall and just look at that, you get absolutely destroyed. Why can we talk about that? We can show you later. For now, just understand that these areas are definitely becoming liquidity areas we need to be careful about. So for us, of course, it's important where they enter and also where their stop loss is. So of course, they're entering with their imbalances fills, whether these demand zones before that or even like in the demand zones, right? They can enter both, right? And of course, their stop loss again goes below the supply and demand areas or below or above these structure points, right? So if they whatever these IC candles, these order blocks, whatever you want to call it, doesn't really matter, supply demand areas, they're all putting their stop losses above or below these areas, right? And of course, that's zones that have been targeted a lot. How does it look like if we take our little actions or fishies in actions again? Literally the same stuff all over again. So what do we do first? Of course, we have an imbalance. We have a valid supply demand, so whatever. Okay, there we go. There's the smart fishies in here. There's coming the breakout fishies, right? So what's going on? Oh shit. There's the reversal fishies, right? There's another breakout fishies, and all of a sudden we have a new zone in here with an imbalance, getting a retest. So first of all, like the trend traders adding into here, because look at that crazy trend forming, like literally 15 touches to the trend line. There again, the smart money traders getting into here as well, whatever. And out of a sudden, we have so much liquidity into this direction. So again, the question is always the same. So what does happen the moment all these strategies are being built up on purpose? They're all in the trades. They all executed their trades. They all have their reason to take their trade. They're all in the trade now. Everything is going. What will happen? Tube. Right? Exactly. There you go. There's your tube. So how does that look a little bit closer though for the smart money traders? It actually, we call it the smart money trap. We will give you a little bit of introduction here now. So what is the smart money trap? Okay. So first of all, we call a smart money trader trapped from an inducement, or pretty much a smart money trap, or in short, SMTs. And we will mark up these zones a lot because they will have a significant role in our overall strategy. Okay. So at some points where these smart money traders are getting confused and getting even stopped out, or getting triggered in and getting a break even in the best case scenario, that's all confirmations for us in the long run, because we understand these zones and obviously take advantage of that again. So in overall, what is a smart money trap though? A smart money trap means if you have this demand area, whatever, imbalance and stuff like that, price will obviously come and taps this area for these smart money traders and then gives a reaction. The definition of a trap is it lets you in but not lets you out. That's why it's a trap. Okay, a trap means gives you access but gives you entrance but not exit. Okay, so a smart money traps needs a reaction in their right direction. They want to see the price go higher. That's why they show the direction higher and then they break later. Okay, same thing with the opposite direction. So again, if they see this imbalance area, whatever order block area, the price taps into there, gives the false reaction just to come back later, and best case for them getting a break even, or worst case for them getting a stop loss area. And these zones happen so many times lately because so many people getting into the smart money hype system and they're trading this system whatsoever. So that's why we introduced like the smart money traps highly and made it like very important for us to identify these zones properly. So let's look at a little bit more advanced example of how we can draw that. So first of all, we drew it already an inducement. Obviously, we dig into that a little bit later, but now just mark it up as inducement. So what will happen? We have an inducement here. We can expect a valid mitigation in this area later. More about this later, right? Again, if this confuses you, no worries. We dig into it more details later. But for now, the smart money traps. Again, this area with an imbalance area whatsoever will get a reaction and gets induced later. This becomes all liquidity. the more a reaction it shows, the more liquidity actually being added, because it seems so valid on the edge, just in order to grab this liquidity later, and then gets to a proper mitigation zone after, and then can continue their valid play. Okay, then of course we have some other variations to the theme where they can trap smart money concepts in here, giving the false reaction here. Same thing on this area, right? If there's liquidity to the left, obviously later well more details about that, giving another false reaction, then making the final inducement. Again, everyone is taking the long trade here, breakout traders, trend traders, reversal traders, you see all the people trading, right? Of course, then maybe whatever, smart money traders entering this one. This becomes later the trap zone, because we will add cycles to the whole thing, and you will understand that this area will be a trap which gives a false reaction and then should chup it. Okay, but so far, just a little bit overview of what is going to what you can expect later on, just to give you the brief introduction about that one. Okay, so how does it look on a chart? It can look like that. Of course, we have an inducement above here, right? Again, price moves in a crazy direction with speed in this direction. It's everyone excited, gives all the people a short. Of course, what happens after that gives the pullback, gets into this area now. See this imbalance area, demand area, whatever, order block area, whatever you want to call it. We know for fact now that this becomes a smart money trap. What should happen to a trap? It should give a false reaction, right? So it gives a false reaction, makes the inducement low, and then goes higher, stops out all these smart money traders, and now goes into this valid mitigation zone or area of interest. Obviously taps into there and then can move lower. That's how we later on will utilize smart money traps in our advantage. And I added obviously the confidence in range, but I went way more about it and way more depth, of course, like later. Just a brief introduction so you understand of how the smart money is actually used for liquidity as well.